Good day, everybody. This is Mike Zuzolo with your Friday, June 21st grain market update. The end of the week row crop trade really dominated by the spreads and the cash basis trade, as weakening cash basis for corn in many interior locations really kept pressure on the front end corn futures, especially the July contract. Meanwhile, the exact opposite type trade seemed to be the case for the soybeans. They continued to see improving basis in the interior. That helped keep the July beans trading at a premium against the November, and the July trying to hang right around that $15 level. Meanwhile, on the short side of the spread, the new crop November beans hit its lowest level since the end of May, as a matter of fact. And the July Nov bean spread as a whole got back up to around $2.20 premium to the July at times during Friday's session. The other difference in the spread, or I should say the difference in the spread trade, seemed to come from the fact that the corn was starting to be sold by farmers. That reported by some newswire contacts, also some cash trading sources saying that maybe a little bit more farmer-related selling and bin doors were opening up in corn versus the beans on Friday. So with that, wheat continued to be the strong suit in the grains, making it the leader to the upside for a third straight day on Friday's trade. Kansas City, Minneapolis wheat both adding to their gains and also supporting the Chicago again since midweek. We're also seeing the disappointing yields in Oklahoma, along with maybe a little bit more improvement in the global demand side of the equation, come in and support the wheat. Friday was no different. We saw the hard red wheat find some support on those disappointing yields in Oklahoma. Also, China came in and bought French wheat this week. I think it was on Thursday afternoon. First time since 2004 that the Chinese bought French wheat. So Chicago July wheat underpinned all week long, essentially. Tried to stay above $7 on a close, but could not do that. Closed just below that, but it still stayed above its 200-week moving average to close out the week. Other Friday factors to watch that will probably be something to watch again when we come back next week. The July option expiration occurred on Friday's close. Heavy flooding in the northern Corn Belt, while a ridge is potentially setting up in the southwestern Corn Belt. Also, outside markets and currencies were also kind of putting pressure, psychological pressure, on the commodities again on Friday. And also newswire private estimates were starting to come out and funnel out ahead of the acreage and grain stocks report next Friday. This is Mike Zuzolo. Go to globalanalytics.biz for more information. And please remember, there is substantial risk of loss in trading futures and options. The impact of cycles or current events on prices may be already reflected in futures. Have a great day. Have a great weekend.